Italian Pie is proud to support WYES and this episode of Wall Street Wrap-Up, and to promote the importance of financial literacy and education.
This week on Wall Street Wrap-Up, it was the worst week of the year for all the major averages as the stock market ended down with new inflation data coming in higher than expected. And with these new inflation numbers, the idea of the Fed lowering interest rates or even keeping them as they are now off the table. And it was 1 year ago today that Vladimir Putin launched his invasion of the sovereign country of Ukraine. Now going into its second year, where does this conflict stand? And for some good news, Netflix is slashing their monthly subscription price in 30 countries. The bad news, the U.S. is not one of them. I'm André Laborde. We've got these stories and more. It's Friday. That means it's time for Wall Street Wrap-Up. Hi, I'm André Laborde. Welcome to Wall Street Wrap-Up for this Friday, February 24th, 2023. Well, coming up tonight, between inflation, the economy, China, the one-year anniversary of the Russian invasion of Ukraine. We've got a great guest to discuss these issues. We're going to be talking with the associate editor of the Wall Street Journal, John Bussey. Now, John brings a unique perspective because in addition to being associate editor of the Journal, prior to that, he was also Washington bureau chief. And prior to that, he was deputy editor-in-chief to Asia, where living in Hong Kong, he saw firsthand China's authoritative rule in taking over Hong Kong. And what does he think will happen to Taiwan? We'll ask him. That and more. We're John Bussey coming up. And this week, hotter than expected inflation numbers came out from the Personal Consumption Expenditures, or PCE. Today, numbers were released showing that consumer was still spending, and as the economy, that's good. But with inflation raging at 6.4% for January, the number one goal for the Federal Reserve is to bring inflation down to 2%. Well, with these PCE numbers, as this inflation will not be coming down in the time frame the Fed wants it to recede. So, the next Federal Reserve meeting will be March 21st and 22nd. And last month, in hopes of possibly the Federal Reserve may lowering or at least not raising interest rates, with these new numbers, I think these scenarios are now maybe off the table. Well, the stock market ended lower for the week with hotter than expected inflation numbers released. It was the worst week of the year for all the major averages. At one point, the Dow Jones was down over 510 points at its lowest for today. And the Nasdaq led the stock market sell-off on tech weakness and the fear of higher interest rates. This week, the Dow Jones closed today at 32,810, down just over 3% for the week. And the S&P 500 closed today at 3969, down 2.6% for the week. And the Nasdaq, they closed today at 11,394, also down 3.3% for the week. Well, it's been 1 year as of today that Vladimir Putin decided to expand the Russian Empire and invade Ukraine. The United States has so far given Ukraine close to $77 billion in aid, both monetarily and military. And both parties are for sending more, but there is disagreement as just how the money sent is being spent and also to be audited. President Biden pledged today an additional $2 billion in aid. And on Wednesday this week, Vladimir Putin suspended the last nuclear arms treaty between the U.S. and Russia. And China is urging an end to the Ukrainian-Russian war and calls for peace talks. All this while Xi Jinping of China is making signs to send Russia military lethal aid to the country. And China is moving from their reopening to the recovery. Companies such as Marriott Hotels or Nike are already opening or maybe have already opened factories in China. At the same time, China is literally floating balloons over the U.S. for intelligence gathering. Has the conflict moved from a trade war to a tech war to maybe now a new Cold War? Well, John Bussey is the associate editor of the Wall Street Journal. Prior to that, he was also Washington bureau chief, and he's here with us tonight. Hi, John. Welcome to Wall Street Wrap-Up.
Good to be here. Thanks for having me.
John, last year in 2022, we had we had a bad year where the Dow, the S&P, the Nasdaq, they all ended in negative territory. And right now, so far, at least so far going into the first quarter of 2023, it's looking like it's going pretty good. Do you think this is a false bottom that we've already hit and is now on the upswing, or do you think that we're more in for more down days of Dow?
Yeah, it's interesting. You can probably find really compelling arguments on both sides, and you'll find some investment houses making both of those, arguments right now. But look, there's some pretty good signals out there. It's not just that the market is doing so well, and it, ended up, for the month of January in a, very healthy way. It's that you're beginning to see discussion of the global slowdown that everybody was expecting and the US recession that everybody was expecting sort of modulated. The IMF has raised its expectation for global growth, not a lot, but a little bit this week. You're seeing some investment banks like Goldman say, recession, I don't think so. There's enough kind of momentum in the job market. There's enough momentum in the construction industry and in other parts of the economy to keep it going. Maybe it's a soft landing, maybe it's a dip into recession for a short period of time, but the really hard landing, you're still seeing some of those arguments, but not as pervasive as it was just a month ago.
Well, right now we're into the first quarter of 2023, and we're getting the results of the fourth quarter of how earnings were for publicly traded stocks. And so far we're doing okay. But do you think that the Federal Reserve will have to continue to keep adding interest rates because they want to slow down the economy because they're concerned about inflation?
Yeah, that's the expectation. The Fed is sort of looking out ahead and saying, okay, it's slowing down, but is it slowing down enough? These are really lagging forces that we address inflation with. Takes a long time for it to work through the economy. And so how much more are we going to have to raise? And there, too, the expectations have begun to moderate. You're seeing consumers spend a little bit less. 2/3 of the economy is the consumer. When that begins to happen, you begin to get a little worried on the part of the Fed. They're going to be kind of happy with that because that means that there's less demand for goods. That means there's less pressure on prices. That means that inflation is likely to come down faster. You're seeing home values begin to, and home buying begin to drift down. These are all kind of negative good signals, for the economy because it does suggest that inflation is moderating. How much that's going to happen and how fast, we don't really know yet.
Some analysts that are also predicting that not only will it start to ease, but they might even go down.
Yeah, Nick Timmeros, our Fed reporter, has great analysis on that question on WSHA.com. Look, they were behind the curve on this. They got caught out. They said that inflation was going to be transitory. It wasn't. What was going on? It was the COVID crisis, the pandemic, bollocksing up supply chains all over the world, particularly in Asia, feeding product into the U.S. that just wasn't arriving on time, that drove up the prices of everything because there were shortages. People weren't going back to work. Factories were having to close during the COVID crisis. We're going through, at least from a global economic standpoint, we're going through an enormous crisis right now in China, where they just dropped all of their precautions and they have huge waves now of illness, of job absenteeism, of deaths. So you're going to see disjunctures in the economy. You're going to see supply chain disruptions again.
I remember in 2008 when we had the real estate and banking crisis. I mean, there were investors that got out because they couldn't stand the pain. And we had about 17 years or so of great times, some ups and downs, but for the most part, about 15 plus years of good times. Do you think that there are some investors that have gotten out of the market because of last year and they go, and of course, you've heard this before, the old saying is, I'll get back in when the market starts to go back up, but will stay out and may not ever go back in?
Yeah, never market time, right? Because you're going to wait and just miss it. It happens in a couple of days sometimes, the moves one direction or the other. Don't you wish that you had really gotten in March 2009, right after that period you're describing, 2008, where everything would just seem like it was falling apart. Like the whole financial system seemed like were the lights going to come on the next day? I was Washington bureau chief back then, and I remember coming out of Paulson's office. He was Secretary of Treasury, and it was as if he had any hair, it would have been on fire, And we were walking back across Lafayette Square to the bureau, and usually reporters and editors are talking energetically about what's going to be the lead of the story. We just interviewed the Secretary of Treasury, and there was silence. We were all thinking, my gosh, does the Treasury have control of this situation? It looks like it's spinning out of control. That was the fall of 2008. Well, the markets surged after 2009, and they're down for last year, but not apocalyptically. I mean, we've had downturns that are much worse than this just from a recession. There's a lot of money on the sidelines. Some people did get out. They're looking to come back in. You can see the market movements right now seem to be on the optimistic side. I would imagine some people, yes, got out and will stay out. Maybe they're a little bit further along in their lives and they don't want to put their money at risk. They're in retirement. But, Buffett talks about this endlessly. Don't try to time the market. And over time, it serves as an investment vehicle that's going to make you money.
Sure. Yep. John, time for a quick Hank Paulson and Wall Street Journal story. Right before the 2008 crisis, I was at a Wall Street Journal conference in New York, and you had Hank Paulson as the Secretary of the Treasury as guest speaker. And after the conference, I was talking to the secretary, and he was, if you remember, George W. Bush nominated him, and he only had a couple of months to go. It was not that, it was in that last year. And we were talking, and he even said,
right.
I've got a couple of months here, and the trains won't go off the track, but at least, I'll be Secretary of the Treasury. About 2 weeks later, 3 weeks later, this occurs. But I was at a Wall Street Journal conference when the secretary told me that. So it just goes to show you never know what tomorrow brings.
Yeah, you don't. And these are people that are, look, they're very competent in their fields, but think back to that time. That was the biggest financial crisis we had experienced in probably 2 generations. Sure. How do you prepare for that? Being head of Goldman Sachs, as he had been, doesn't prepare you for what he went through. He walked right into the turbine fan blade.
In fact, I had John Mack in his book as chairman and CEO. He said when he left on Friday, if the Japanese didn't put their money into Morgan Stanley, they would not be opening on Monday. And Ken Griffin, who has Citadel, said that if Morgan Stanley didn't open, Citadel would be out of business. And we've had John George on the show, Bill George on the show a few times, and Bill was a board member at Goldman Sachs, and he was on a board member at the time of this going on, and he said, that Lloyd Blankfein would call John Mack and say, keep going, because if you go down, we're next.
And you think to yourself, my gosh, the system is more fragile than I thought. You come to that conclusion. But now in retrospect, you look back and you say, something, the financial system of the United States weathered that period. It's probably more resilient. Admittedly, there was a lot of brain power and a lot of people who understood markets and who came from the street and could call in favors and could communicate with different heads of Wall Street firms. It was a unique moment. But on the whole, it proved more resilient, perhaps, than we thought.
You have a unique perspective because you were in Hong Kong, and I'm assuming maybe China too, because I wanted to get it right, were you bureau chief?
Yeah, that's right. Yeah, I was responsible. I was a deputy editor of the paper responsible for Asia. So I was based in Hong Kong, and China was part of my remit. I had been Tokyo chief before that, and then years before that, I had lived in Hong Kong. So I had a background in Asia, and I got appointed to run that coverage for the paper, and then also run our overseas edition.
Well, John, how do you see Xi Jinping right now? He has just been I'll use the term reelected by the CCP, and I'll use that term loosely.
That's a very generous term that you're using.
I am being very generous, and I really should. Right.
Yeah.
It's sort of like I dare anybody to run against me. But, the CCP just gave him a third term in October, and that's the first time since Mao. So there's a part that now is more solidifies his power. Do you, and the culture of those of Hong Kong and China, what do you see maybe the rest of this year, going into 2024? What do you see the near future to be like?
Frankly, really, it's the United States finally, over the last 5 or 6 years, coming to terms with the fact that it's dealing with a ever more powerful nation that does not have the rule of law, where you don't have business methods to resolve business disputes that are based on law and legality in many cases, that it's a country that has over the top stolen American technology and plans on continuing to do so. It's worked very well for China, so why stop? The relationship with the United States is fraught, but probably this was inevitable, and it's good to see, quite frankly, from a business standpoint, the U.S. Contending with this more openly. The TikTok controversy, any number of semiconductors, export restrictions, to China. What is Xi Jinping going to do? You've seen what he did to Hong Kong. I live there. It's just tragic. The big jackboot of authoritarianism coming down on the freedoms in Hong Kong have been sort of made manifest. So would he do the same thing in Taiwan if he had the opportunity? He's got a lot of problems at home now to contend with. Would he make a move on Taiwan right now? Probably not. Not just COVID-related problems, but
what he sees going
his
on
power within the Politburo.
Yeah, probably what he sees right now going on if Russia would have had their way with Ukraine, the chances would have been with Taiwan would have been much greater. But the way they're fighting was so strong for their country. I'm talking about Ukraine. That's probably what's holding him off from even thinking right now about going into Taiwan.
It's been bracing for them to watch what's happened in Ukraine. And also, quite frankly, for what has probably been we'll look back on this and see it as a rather remarkable U.S. foreign policy success, which is galvanizing European support for Ukraine, and the U.S. supplying not men, but materiel for a proxy fight with another authoritarian nation, Russia. Mm-hmm. But this time with a proxy, a very brave Ukrainian force that is behaving very differently than the Afghans did or the South Vietnamese did.
You've got 1.4 billion people in China, and businesses, U.S. businesses, and those that are publicly traded for the most part, but private as well. They see 1.4 billion. They see 1.4 billion customers. They see factories that are, Apple, Nike, Google, the NBA, National Basketball Association. How do you balance with what we're just talking about just now with businesses wanting to make nice with communist China, while at the same time making sure that they don't get too dictatorial and want to expand to other areas?
It can be scary doing business in China. You're asking the fundamental question of the last 30 years. I think business is looking more cautiously at China now and has been for the last 10 years. And the U.S. is beginning to formulate policy that reflects that. The fact that they're limiting certain types of exports to China, the fact that they're much tougher on what's going on in the consulates, what's going on with industrial spying in the United States. Companies are looking for markets outside of China to source, having experienced all sorts of instability in their supply chains as a result of COVID and as a result of fractious relations with China. So it's gotten a little bit more realistic. I remember one IBM executive telling me, we're not worried about that. We're not worried about intellectual property theft because we're 6 months ahead of them. We're coming out with our next iteration before they can rip off our last. and let them make hay out of our last one. And I thought then, gee whiz, you're giving yourself a 6 month, a 6 month head start. That's not very much. People
I'm,
underestimate China.
I'm sure Sears and Roebuck thought that they had the head start over with the catalog, and they stumbled. If you're just joining us right now, we're so happy to have the associate editor of the Wall Street Journal, John Bussey. We're going to take a break, but we'll be right back. And we're back. We're talking with John Bussey from the Wall Street Journal. Well, next month, the House is supposed to have the CEO of TikTok on the, make an appearance because they want to regulate TikTok. I know you have a daughter, and I know parents that have daughters, and especially, I don't know that much about. I'll be honest. All I know about TikTok is what I read out of the Wall Street Journal, but they say it one of the things,
source.
Very good source. But it one of the problems is that it has a problem of objectifying young teenage girls. What do you think we should do about TikTok?
My feeling on that is that maybe it's not paranoia at all. Maybe it's precaution. The capability of these apps to do things through the algorithms, anti-democratic, pro-violence, pro-Putin, destabilizing material to folks who might be influenced by that is profound. TikTok is no different. And so are the Chinese, inclined to do that? When I was living in Hong Kong, we had sourced about 70% of the food from China. And so there was one after another food scare of contaminated food coming in from China, aflatoxin in the peanuts, this and that. The rule of law and transparency and accountability and balance of checks and balances and balance of power that we're used to in the United States doesn't exist in China. And so too at the very top, where there are kind of proclamations made by the Politburo for technology to do this or to do that. I would be very skeptical of apps, of product coming out of China, I'm afraid, because of the lack of rule of law, the lack of transparency, the preponderance of the surveillance state and its effect on 1.4 billion people, the desire of China to project that abroad on its own citizens and on other nations and influence those other nations. I'd be very, very suspicious.
Do you think also that TikTok right now, I mean, they've got congressmen right now, both senators and House members, that are wanting to introduce bills to either outlaw TikTok, even make it from a China corporation where there's a Chinese CEO to a U.S. corporation under U.S. control.
Yeah, I'm not sure what the solution is. I mean, we've already seen one state government say, hey, none of this on our devices, state devices. I'm not sure what the corporate resolution is, but it has to be one where the rules of the company are those of accepted international norms, not China dictated, because we don't share the same norms. And it's not just TikTok, it's a lot of product from China, including telecommunications. You've seen this with Huawei, that the US is very concerned about a huge telecommunications equipment provider, Huawei, supplying critical infrastructure in the West, where it may or may not have backdoors, or it may not have shutdown protocols that could put us at a huge disadvantage in the case of a national crisis or conflict with China.
John, you've got a unique perspective. I mean, when you were growing up, I mean, your dad was with the CIA, And it was learning, I'm sure, at the dinner table where maybe some people, kids would go, "How was your work today, Dad?" You couldn't really sometimes ask that. So I'm curious, like with the fall of Afghanistan, the Wall Street Journal had support staff that were in Afghanistan, and to my understanding, that the editor or your bosses asked you to kind of help usher or take care of some of the support staff or try to get them out of Afghanistan after the fall had taken place. Are you still working with that?
Dow Jones, the parent company of the Wall Street Journal, is a very collegial place by comparison with many newspapers. And it really has stepped up in this regard. We had 15, 16, 17 kind of principals, people who had worked for us, but we said to them, if you want to come out, we will take you out and your families. This is the first time I've managed a number of different kind of staffs and departments for the Journal. This is the first time no one has said, not once, and I report up to the editor and to the CEO and to the head of HR, no one has said, you're spending too much money. Everybody has said, just make it happen. So it's been a very impressive performance by a lot of different media organizations, Dow Jones included. Yeah.
John, I've had a lot of fun. I've got more things to talk about. I hope you come back.
My pleasure. Anytime.
Thank you, John. Well, if you've got a question or a comment about the show, love to hear from you. Make it concise, make it pithy. Write us at andre@wallstreetwrapup.info. So let's look ahead at the market heading into next week. But first, what is the most watched television program of all time outside of the Super Bowl? We've got the answer in just a moment. Well, what is the most watched television program of all time outside of the Super Bowl? MASH. In fact, it was on February 28, 1983. It was watched by 106 million viewers. Well, join me next week when we're going to be discussing China and their quest to expand both in the China Seas and economically. My guest next week is going to be Jonathan Ward. Jonathan's written a new book on China's aggressiveness called The Decisive Decade. He's been a guest on our show before, and it's always interesting with his thoughts and knowledge of China. That's next week, author Jonathan Ward. Well, that's our show for this Friday, February 24th, 2023. My thanks so much to John Bussey for the Wall Street Journal for joining us this evening, but especially I want to thank you. Thank you for allowing us into your homes this evening. Have a fun weekend ahead with the ones you love and a productive week as well. I'll see you next week. Remember, if it's Friday, it's Wall Street Wrap-Up. I'm André Laborde. And remember, money never sleeps. Good night.
Italian Pie is proud to support WYES and this episode of Wall Street Wrap-Up, and to promote the importance of financial literacy and education.